Welcome to Good for Bitcoin, a weekly show recorded live every Friday, where we recap the top events of the week and talk about everything that is good for Bitcoin. If it's built on Bitcoin, then it's good for Bitcoin. Let's get started.
Content shared on this podcast is for informational and entertainment purposes only. It does not constitute financial, investment, or legal advice. The views and opinions expressed are those of the host and guests and do not reflect the official policy or position of any other agency, organization, or company. We encourage you to conduct your own research and consult with a qualified professional before making any financial decisions.
All right. Welcome to another week of Good for Bitcoin. I'm your host, Kate. I'm not joined by Brandon. He is out enjoying the real world today. So, Brandon, I hope you're not watching this, but if you are, hello and welcome to Good for Bitcoin as an audience member. So thank you to Shaylee and Jason for being here. How's your guys' week been so far?
So far, so good.
Great.
Yeah. Anything exciting happen? Doesn't have to be Bitcoin related, but anything fun happening in your lives?
It's been so busy. I mean, we just got back from events and everything else like that. So these weeks in between, Brandon is a hero for taking PTO. I hope he is touching grass.
Yeah.
But it's nice when not a lot's happening, so you can reset. And that's how this week feels. It's like a really good reset into the summer.
Totally agree.
Yeah, I mean, Bitcoin Vegas was amazing, and I'm still catching up on things afterwards. There are a lot of follow-up emails and events that we have to plan and preparing for permissionless in Brooklyn, which is coming up. So that'll
How
be
many
exciting.
hundreds of Telegram chats to catch up on? That's my favorite.
Oh, that's too funny. Well, we can get into the show today. We'll start off with some Granite news. We don't have much else for Trust Machines, but Granite is stealing the stage this week. So we are now listed on DeFi Llama, which is pretty cool because now we can compare how we rank alongside other lending protocols on stacks. And it just opens us up to a broader DeFi audience. So that is a pretty cool accomplishment. I believe you can also check out Granite's TVL. We're around 14 million at the moment, or 130 Bitcoin, which is pretty exciting. And yeah, I think this is a huge move for Granite. And then in other news, we have our creator program. So this was something that Brandon and I worked on. I'll share a little note about it. So basically, we wanted to get people into using Granite, understanding how to use the protocol, and then share their experience with it. And so we came up with this idea of a creator program. We've also been building off some other people in the Stacks ecosystem who have done similar things. I know Velar has done one, and we had a Leather Ambassador program. So we really like this approach to, engaging with the community and getting the word out about how to actually use Granite. And so we're looking for people to participate in this program. So how it works is for the month of June, you can submit your content submissions. We're only doing it on X at the moment. Top 10 creators will receive 100,000 sats, or about $100 worth of SBTC. And we're going to choose our top 10 favorites. And then everybody who participates will also receive this Stonemason NFT just for participating and being a part of our community. And so we're pretty excited about it. So yeah, we're really looking forward to seeing how people are actually using their loans, whether it's, deploying it in other protocols to earn more yield. Maybe you have a personal expense. Maybe you're buying a car or something. Or maybe you're paying off a loan in the CeFi, TradFi world, and we just have lower interest rates over on Granite. Lots of different ways you can use your loan, but we're looking forward to seeing all the submissions. We've had over 100 people sign up for this program so far, which is so exciting. And I think a lot of good things will come from this. So shout out to Granite. We're doing a lot of good things there.
Yeah, it's been really cool to see this program. And I'll just say, and Kate, you'll have more information on this, but what you're looking for in some of these submissions, obviously it's open-ended.
Yes.
But the ones that have been highlighting the unique angles for Granite, like soft liquidations, is such a huge factor in what makes Granite different. And then the notification system is something different in DeFi. The ones highlighting that for me have been my favorites to kind of see so far, but yeah. I can't wait to see all the different ones.
Totally. Yeah, it's really good to highlight both the great features of Granite and then what you're actually doing with them. So that's been a good blend to see those different types of posts.
I need to hop into this thread. This looks really interesting. I haven't seen this.
Yeah.
I will take a look.
For sure. So yeah, if you go to our Granite page on X, you'll see an announcement about the post. Basically, we want people to go through a block survey just to verify that you're human, that you're real. And then from there, you'll get entered into our Telegram group where you can, ask questions, post your content, and just kind of like engage with other people and get a good idea of, different types of posts that you would want to make or something like that.
Very fun.
Very exciting. All right. Good for Bitcoin. We always start with public companies buying Bitcoin. And I found this resource recently that I thought was pretty cool. So I will share that so you can all see this. So basically, we have Bitcoin that's existing in treasuries and then the number of different entities that are holding Bitcoin. So I really think this is like a good overview of, sort of like the institutional side of Bitcoin. So at the moment, we have 130 public companies owning Bitcoin on their balance sheets, and that's a total of over 820,000 BTC. So that's huge. And then you can come down and see, who's actually holding what, how much they're holding. And then there's just some good charts that break it down even more. So if you're ever talking to people about institutional adoption for Bitcoin, this is a really great resource. I really enjoy looking at this.
It's always interesting to see this chart because I feel like the MicroStrategy really led the way for, public companies holding Bitcoin in their treasuries.
Mm-hmm.
You're starting to see this with Ethereum too, but the question is, and then of course, like on the retail side or institutional investor side, they're buying those stocks because they think that Bitcoin is a part of like what they're buying. So it's like an interesting marketing angle for those companies. But the question to me is like, you know, how long does this last? Like, will everybody do this and then will it trickle down into DeFi, layer twos like stacks? Or And what we're starting to see now is like financial products in the traditional finance space being built around using Bitcoin as collateral. But will some of that be used for on-chain finance in the future, and how long it will take to trickle down into DeFi? That's the thing I'm curious about.
Yeah, that is the big question. Because at the end of the day, that's like what we're about, right? Is building things that allow people to do more, deploy more, and do it in a trusted way. And get your Bitcoin out of, I don't want to say it, but get your Bitcoin out of cold storage.
Yeah, no,
And let it work for you. But yeah.
It's funny when we look at some of these things because it almost reminds me of all the people who haven't gotten that direct exposure yet, right? You see Grayscale, you see these ETF players on these lists, and it just is a reminder that people are semi-exposed in their, portfolios to Bitcoin, and there's still another step that we as builders get to try to take to have them come completely over and try DeFi and everything else, to Shaylee's point.
Totally. I mean, last week on the show, Brandon and I were talking about sort of like a Vegas recap and just how much more work we need to do to get people into layer twos. Like there's kind of this disconnect. People either fear them or they just don't understand sort of like the advancements that's been happening and how far we have come in development. So it just takes a lot of work and, a lot of conversations and patience and working with people.
Yeah,
So.
it's kind of like having books on a bookshelf versus being able to like read them on your Kindle, and check them out pretty quickly. Or I don't know the best like analogy, if that's the best analogy, but just like the ability to read things online truly changed the information economy versus just having them like having to go to the library to check them out. So we're hoping the Internet of Value and DeFi will continue to like be decentralized and people come out of cold storage, like you said, but it will take time.
Internet of Value is not a term I've heard recently. That's an oldie. I love it.
It's an oldie but goodie. I always go back to like Chris Dixon's Read, Write, Own.
Yeah.
I think we're seeing trickle down effects slowly.
It takes time. It takes a lot of time and a lot of trust to build too. This is like the most precious asset a lot of us will ever own. And so, you got to build trust to allow people to come into your eco and do more things. We're getting there. But I'll go over a list of who has actually bought Bitcoin this week from a public company standpoint. The first one we heard was Belgravia Hartford Capital. This is an investment holding company. I think they're Canadian based. And they purchased 4.86 Bitcoin. When we're talking about public companies buying Bitcoin, it doesn't seem like a lot, but it's still more than most companies own. They secured a loan from Round 13, which is a major digital asset fund in Canada. And they're starting with a $500,000 purchase, but they're really looking to build Bitcoin into their long-term financial strategy. And I thought this was interesting. Their CEO made a note about after months of due diligence, they finally realized that almost not including Bitcoin in their long-term strategy would be risky. So I think we're just going to keep seeing more and more of that as companies do their due diligence and realize it's probably a very smart move to actually bring it on your balance sheet. The next company is KULR Technology. They're a sustainable energy management company. They bought another 118 Bitcoin, so they're now holding 920 in total. And this one's interesting because they just also joined the Bitcoin for Corporations initiative. So this is a strategy Bitcoin magazine initiative that really is trying to promote corporate Bitcoin adoption. So any companies that sort of join this initiative get access to institutional grade tools, frameworks, peer networks that just make it easier to expand their Bitcoin holdings. So that is a pretty cool use case. Then we have Bitmine Immersion Technologies. They bought their first 100 Bitcoin. And this one's interesting because I think they're a mining company. So I'm sure that they've been accumulating Bitcoin, but this was the first time they actually bought it. And they're planning to just keep adding it to the balance sheet, keep buying it. They funded it by a recent stock offering. And then we'll finish it off with Strategy, of course. They bought another 1,045 Bitcoin. This is their ninth straight week of buying Bitcoin. They now own over 582,000, which is pretty crazy.
Yeah.
What was interesting for this one is stocks are not my strong suit. Basically, they funded the whole thing by using their 10% preferred stock. So it's not their regular shares, so it doesn't dilute their existing shareholders. So it basically just allows them to raise more cash and buy more Bitcoin. But it's really cool because, obviously Saylor is building this Bitcoin-backed yield curve and offering different levels of yield, risk, priority, kind of like how traditional credit markets work, but obviously backed by Bitcoin. So pretty interesting plays. All right, we can get into some more fun news. SEC Chair Paul Atkins, he gave a speech this week on DeFi at the DeFi and American Spirit Roundtable in Washington. Shaylee, I'm sure you've probably maybe heard a little bit about this, but it became a pretty hot topic across crypto because it was very positive, very crypto friendly, probably the most progressive crypto statement in the last 5 years. So there was some major signals that came out of the speech. I thought I would rip through those and then we can, maybe comment on some of them. So the first one is basically DeFi is no longer a gray area. It's an extension of American values, so like economic freedom, property rights, innovation, and these are not threat to institutions. They're just, an extension of American values. The next one was the SEC is ready to revisit securities law through an on-chain lens and calls for pro-innovation regulation. The SEC should issue clear rules or exemptions that enable responsible innovation. Next one was proof of stake may no longer fall under securities classification. So miners, validators, developers that are participating in, decentralized networks or that are publishing self-custody code software shouldn't automatically trigger securities law. I think we can agree with that one. And kind of going along with that, it's just, people who are developing and executing this self-executing code should not be criminals. So current securities laws assume that if you're operating in crypto, you're kind of like a centralized intermediary. They haven't really accounted for decentralized software systems, and that gap of understanding has obviously slowed down a lot of progress. And then there was talk of this innovation exemption. So this would offer a legal path for on-chain projects who wish to operate compliantly within the US. There might be like temporary exemptions that let projects skip certain rules, under specific conditions that speed up innovation for emerging tech. So it would help bring on-chain products to market faster while the SEC reviews its regulations.
This is such a net win, especially for, Shaylee, you've seen it too, being in this industry for so long, but it's like DeFi spent the majority of its lifespan now bootstrapping itself, like living through the obstacles of, US clarity, trying to abide by them a little bit. A lot of people finding their way overseas, trying to find climates where they can figure out how DeFi works. We've seen it be successful in ETH. We've seen it, other L1 pop up and L2s. Now we're seeing Bitcoin DeFi really sprouting. So just imagine with this clarity, like what these projects can really start to do in the US. I'm very excited to see what this new SEC landscape provides for DeFi.
Yeah, there's some just like really great advocates with the SEC right now for DeFi, which is wonderful. And I love, the proof of stake, the changes to like thinking around proof of stake and just like what it is to be on chain in a decentralized, like a self-custodial wallet, smart contracts, etc. The thing I worry about is that, I think it's wonderful because you're already starting to see like events and businesses just move more quickly because they feel that they have some regulatory like space now. Like they're okay. They're not going to go to jail for like launching a business or potentially like launching a token. But I also think we need to obviously always protect consumers, make sure that they feel that you're putting out there like what the potential risks are so that consumers are aware, like these disclosures. And I also think like the stablecoin and market structure legislation is getting headwind, but they really need to get that passed as well, um, to so that some of these statements actually come to fruition and they're not just marketing from the SEC and thinking from the SEC, that we can actually have these things in the law. And we were hoping to see that before, people went away for the summertime, and I'm not sure that that's going to happen. That's hearsay, but we'll see.
Yeah, there's been some movement, which we'll get into a little bit around like Clarity Genius Act.
Yeah.
But they take time. Like they take a lot of time to get through.
Yeah. I didn't realize it took like 5 to 20 years to get legislation passed. I really didn't realize, but people have been telling me that. Like it might take, I don't know, for any industry.
Yeah.
Anyways, not to sound bearish, but this is exciting. This is very exciting.
Yeah. Well, the next one is really around like Bitcoin itself. If you guys are familiar with Bitcoin Core, like the dev group, like it's tough to reach consensus around changes, and that's probably a good thing. But there is a potential new soft fork on the horizon, so it's still very much early days, and there's no guarantee that this will go through. But this week, 60 Bitcoin engineers signed a joint statement that they support the next potential soft fork. This would combine 2 BIPs, so that's like a Bitcoin improvement proposal. It would combine BIP 119 and 348. If you want to check those out a little bit more in depth, you'll kind of understand what's going on in them. But it's the most support that we've seen in years. So there's support from wallets, mining, hardware, custody, financial apps within the ecosystem. And the upgrade would bring improvements like making Lightning more efficient, enabling better wallet features, improving mining payouts without it being too complex and risky. So there's going to be a 6-month review timeline, and there's a formal ask for the Bitcoin Core to really prioritize reviewing it. But there is momentum building around this one, reaching consensus. There's been a lot of drama with the op return debate, so that's kind of winding down. But the next step for us to watch out for is an activation client. So this is like a tweaked version of Bitcoin software. And it basically just lets users, miners, node operators signal support for potential upgrades. and help lock it in. If this keeps moving forward, it could be the start of, more innovation on Bitcoin. Yeah. I don't know if you guys have any thoughts on this one.
I'm such a big proponent of letting Bitcoin Core devs, run the
Do their
race
thing.
at their
Yeah.
pace. They do such great work, thankless work, but at the same time, it's just like Congress getting something passed. It happens very slowly if it happens at all. And so if they're moving and grooving to something, like, by all means. I'll have to review, though. I haven't seen those 2 bips this week, so I'll have to look into them.
It's always tough as like a non-technical person to really understand what the changes mean and what that would mean in the long term. And that's usually, I think, where a lot of like the heated debate comes from is, there's people who are extremely technical and understand this like in and out. And then there's people who, like myself, believe in like the concept and sort of like the overarching implication of Bitcoin. And it's sometimes, it's obviously going to be difficult to reach a consensus, but this one seems to have more consensus than any kind of BIP that has been proposed in a long time. So we shall see. The next one is about JP Morgan. So they're kind of embracing Bitcoin a little bit more, which is fun. Not long ago, their CEO, Jamie Dimon, said he would fire employees for trading Bitcoin. Then in May, he said clients of the bank can buy Bitcoin, but he was still very much reiterating his skepticism about cryptos and Bitcoin. But now he's letting his clients use Bitcoin ETFs as loan collateral. And what's even more is they'll now count any crypto holdings when calculating a client's net worth, just like they would do with stocks, real estate, or art. So it means Bitcoin ETF holders can now qualify for things like home or business loans, where before their Bitcoin was not taken seriously at all. So
it's hard to ignore when the biggest players, are exposed to Bitcoin in the way they are. I mean, this just makes sense. I don't even see it as Jamie Dimon, turning his back and just saying, like, do it anyways. It just seems like a logical step if you're the CEO of a company like JP Morgan to say, hey, we're at a place where institutional players, family offices, big people, big movers, want to do more with what they got, and they have exposure to Bitcoin. Like, I would be shocked more these days if people don't have some sort of exposure somewhere to Bitcoin, to be honest.
Totally. What's interesting is, I mean, obviously, we've been following this in the news for those of us who are like plugged into crypto, whatever Jamie Dimon has said about Bitcoin in the past. So this is great, right? It's like a win for all of us. But what's amazing is that this is just bringing Bitcoin to retail users who would normally not be buying crypto in Coinbase, for example. It's just like bringing more awareness to your average like retail user, which is wonderful. And what's interesting as well is like I remember going to a small credit union and they accepted my crypto as collateral. This was like
whoa.
3 years ago. So the fact that like JP Morgan is now doing it, I'm like, okay, that's great. But there are smaller, more nimble financial services
Yeah.
actors that have been doing this for a while.
How did that work? Like how did they sort of like trust your collateral? Like how did the exchange work with the bank, with the credit union?
Well, we listed the assets, including the crypto, and we just sent like the verification.
Okay.
Um,
Yeah,
it
that's
was
pretty
interesting.
cool. Love that. We can get into some of the government advancements. Would love to know your thoughts. Obviously, Shaylee, you're more on the ground there, but the U.S. Senate has moved forward with the Genius Act. So this is their stablecoin focused bill. It was introduced over a month ago. There was support from majority of the senators, including some Democrats, which is obviously great. I think the vote passed 68 to 30, voted to invoke cloture. So this means the bill will now head to a full debate and a floor vote before potentially moving to the House. The bill requires stablecoin issuers to hold full reserves in US dollars or treasuries, keeping customer funds separate and undergoing regular audits and following AML rules. So, good stuff. It's the first serious attempt at a legal framework for stablecoins in the US, and it has bipartisan backing, so that's always a positive. Yeah, it's important because right now, giants like Tether are dominating, but they operate offshores. And, US-based players like Circle or PayPal are kind of stuck in a regulatory limbo. So Genius would hopefully change that by giving federally chartered issuers clear rules and oversight on how to play in this space, and hopefully pave the way for more institutions to enter. But some people are not as happy because they're saying it favors big players by making compliance too expensive for smaller innovators. Yeah. If you guys have some thoughts on this, I would love to know.
Yeah, I've heard mixed things on Genius. I don't think it quite covers, like, I think, so from what I've heard, it could potentially push some stablecoin issuers like offshore
Even
because,
more.
yes, that's what I've heard. And so I think, yeah, I think there's some changes that'll probably be made before it actually
Mm-hmm.
gets passed at the industry's request.
Interesting. Okay. And is that
Well, some
because,
parts of the industry, I will
yeah,
say.
yeah. Is
Yeah,
that because
smaller
of like
actors.
the smaller ones? Yeah, because it's just like it's still too cumbersome for them to operate, too expensive. Yeah. All right. Well, we also have the Clarity Act. So this is the digital asset bill. And on Monday, there was 8 major U.S. crypto associations that released a joint statement saying that the BRCA, this stands for Blockchain Regulatory Certainty Act, has been included in the newly introduced version of the Clarity Act. So this is all about protecting DeFi devs and builders who don't hold funds, so they're not custodians. And yeah, the message was very clear. If you want to be serious about crypto regulation, BRCA needs to be included in Clarity. Yeah.
No comment.
No notes.
I will say most of my notes, and they're a great call out, is blockchain association with some of these things, because to get into the weeds of some of these bills, it's just there's so much reading involved. So it's always hard to have a really clear opinion on some of these things because the details aren't always out there. So blockchain association does a great job at distilling some of these things for people like me who aren't in the weeds on the bills day to day. So I do recommend going there to check out some of their breakdowns.
Very nice. Okay, thank you. To wrap it up, we have 2 big partnerships that I thought would be good to highlight. So the first one is Coinbase and American Express. We probably all saw that one. They are launching the first ever branded credit card in partnership with Amex. It's supposed to roll out in the fall. Only available to US members of Coinbase One, and the card will offer 2 to 4% back in Bitcoin on everyday purchases, along with access to Amex perks. I'm actually very jealous of this one. I would love to get on board that. So that one's pretty cool.
I haven't seen the 2% part. I'll have to look it up. I've seen the 4%.
I've seen 4, but then
pushing the 4 hard.
Yeah, they're very pushing the 4, but then I've seen other sources say 2 to 4, so I will have to verify that one. But yeah, that's pretty cool.
I wonder how it stacks up. So which ones do we have now? We have the Gemini card, obviously, and that one does 2% back. I think the Fold one does 2 on everything, and that one's not out yet. So we're getting competition finally with some of these.
Yeah.
Coinbase was just a prepaid Visa before, right?
Correct.
They didn't actually have a credit card, yeah.
They had a debit card, yeah.
And that a lot of people didn't use that, right?
Yeah.
The prepaid. But I think the credit card is going to be killer.
Yeah, especially in partnership with Amex. I feel like that's a very strong brand on its own. So like those, just a great partnership.
Question though is like, and the thing about Coinbase is that'll be different. I don't know how they all kind of pan out, is when you get your Bitcoin, does it then connect, like from a UX perspective, seamlessly into your wallet, and like which wallet and how can you use it? That's curious.
Totally. And the next big one, which I'm sure we've all seen, is the X and Polymarket collab. So they announced a strategic partnership which designates Polymarket as the official prediction market partner. Whatever this means, we're still not super sure, but I think it's probably going to be like real-time Polymarket probabilities combined with X social posts combined with Grok, just giving live data, insights. That's pretty cool. Polymarket I think they're built on Polygon. They settle trades in USD and they log every bet on chain with smart contracts. So very cool.
The amount of subtweets for Grok that are going to involve Polymarket stuff now is going to go crazy.
Yeah.
As soon as I saw that.
Yeah. So In last year, there was 8.5 billion basically waged on Polymarket, and X has around 550 million users. So this could be the next Trojan horse for crypto. You never know. When stacks on Polymarket. Very cool.
Working on it.
Yeah, you got it. Was there anything else this week that caught your guys' eye that you wanted to catch up on? It was kind of a slow week, honestly. Last week was very busy. This week was a little bit slower.
I know you and Brandon covered it already, but I've been just like week 2 high of Leather Mobile. We launched on Product Hunt this week. That was kind of our big thing this week, putting it out there. So if anybody goes on there and uses Product Hunt, make sure to give us the upvote. But just like really getting to dig into it after the noise has settled down a little bit and use it as a user this week was so much fun.
Yeah.
Totally agree.
I'll say one highlight this week for me was Hex Trust, an institutional wallet, custodial wallet, is now supporting SBTC, which is huge. So that just like kind of demonstrates the institutional demand for DeFi. But, to be able to address that demand, you need all this connectivity with the service providers to those institutions. So we're getting there slowly.
And we also just heard that Stacks is launched on Polynomial. Is that true?
Yes, that's huge. Yes.
Yeah.
That just happened this morning.
Yeah, so lots of good integrations and partnerships happening. All right. Well, I think that wraps up the show, you guys. Thank you so much for coming on, saving me today.
Thanks for having
Thanks,
us.
Kate and Jason.
We'll be back next week, Friday, 2 p.m., as always, for another Good for Bitcoin live episode. And thanks for everyone who is tuning in, and I hope everyone has a great weekend.
You too. Bye.
Thank you for listening. We record Good for Bitcoin live every Friday at 2 p.m. Eastern Time on X. Please follow us at Trust Machines Co. if you would like to listen and engage with us live. Visit us at trustmachines.co for all the latest Bitcoin news. We'll see you next week.